they want to sell above the market price. So smart money traders, they want to sell here above this market price. And if you look at the bullish scenario where we now have retail traders, they want to sell below the market price, whereas smart money traders, they want to buy. They want to buy below here, below the market price. So this was the market price. They want to buy below it when price is now at a discount. So let's look at a practical example. So this took place yesterday on the 13th of December 2023. So if you look at this chart, we also gave this signal. We also give this signal. The price was bullish. You see, the price was bullish, but the overall trend, we are looking at a 50-minute time frame. But the overall trend that was there in that particular time frame, if you look at the high time frame during this particular time, we could see that volatility 75 on the higher time frame is bearish. So during this correction, the market within the internal structure was bullish. So you can have an external structure which is bearish, but the internal structure can be bullish. What I mean is this: if the high time frame structure is telling you that the market is in a downtrend, you can have, when the market is making a correction, it will be moving in the opposite direction. So the market on lower time frames can also be having an uptrend. It can also be bullish, like what was taking place here on the lower time frame. On the 50-minute time frame, the market was bullish. So what you would see is this: the raid on liquidity took place at this particular level. Here we can see there was a continuation of what? Of a bullish trend. And when the market was able to break above this level, this price level, this level that I've marked here, this level, retail traders are going to see this as a continuation of the bullish trend. Mind you, on the higher time frame, volatility 75 is bearish. So this was a raid on liquidity. This was a raid on liquidity. And you can see once the price was able to go and collect the buy side liquidity, there was a liquidity pool residing above this old high. So this one is called an odd high. This one is also called an odd high. So there was buy side liquidity residing above this old high. What was the form of this buy side liquidity? It was in the form of buy stops. A buying interest. They want to buy when price is broken above this market price or this price. So these retail traders, they're looking forward to buy when price is broken above this level. So they started to buy here. And you'd see smart money traders, they want to sell when price is reached a premium. So if you take our Fibonacci here, we stretch it from here to here, we can see price during this range, price range here. Price is within the what? This pink or reddish color, which is our premium. Price is above this 50 level. So as a smart money trader, you must know that you are never going to buy when price is in the premium. You want to sell. So the smart money traders, they want to sell when price is above the 50% of the Fibonacci, which is our premium level. They want to sell at the premium what level. So smart money traders, they then sold at this particular level. When this raid on liquidity, price moved upwards just to hit the stop losses that were there when there were some traders who were actually selling here. Obviously, their stop losses were tight and they were just above this old high. So there's stop loss of sellers, retail traders who were selling when the price was moving down. And there's also some retail traders who are putting pending orders above this old high. So the buy side liquidity was taken. There was a liquidity sweep or a raid on liquidity when price was manipulated and went above this old high. So price was able to grab liquidity. This is what you need to master. This is what you need to master. You must always know where the liquidity is residing. So in this bearish scenario, the liquidity was residing above this old high. And we can see once this liquidity was taken, the price then started to move downwards. You see? What then happened? The price then started to move downwards. So there was a manipulation, there was a raid on liquidity here. This is the only logical reason why price went upwards and went above this old high, so that they could get liquidity to move downwards. And this is why so many retail traders would lose in this particular market. And we can see price, once it hit the once the raid on liquidity was took place, then the price started to move downwards. And we can see this is what took place. Price then just started to move downwards. So how do we take advantage of this? How can we trade this? Okay, so the structure that you're going to be using is the structure that I told you, that once, okay, price came here, and we're just going to assume that here, and then price went above that old high. So what you're waiting for here is one. You want price to give you a change of character. Okay, let me just do this. So we have an old high, price comes down here, and then it moves up, and there is a raid on liquidity. Okay, no, before I do that, let me just do this. Price is moving up, comes down, there's a continuation, and then price comes down, and then price will then be manipulated to go above the old high. But when price was moving, it came down, and then it moved like this, and there was a change of character, meaning that there was a continuation of that particular trend. But what you would be waiting for is for the price to break below the previous high low that resulted in a break of structure, where this will then result in a change of character. Once the change of character is there, you then wait for a return to an order block, or a return to a liquidity void, or a return to a fair value gap. And then once that has taken place, you then take your trade from there, and then you are in. Okay, I'm going to explain what is taking place here. So this is how we now trade and taking advantage of this particular raid on liquidity. So we can see here there was a break of structure. We had a break of structure here as the price was moving up. So we have a BOS. So this is, I'm now teaching you guys how we can trade with confirmation when there is a raid on liquidity. How do we trade with confirmation? I'm always after taking trades that have more confirmation. So this is how we then trade using this. Here, just want to move this to this particular level, and then the price was then manipulated and went above this old high. So this is an old high. This is an old high. This is an old high, and then price was manipulated to move above this. So some people would say, I want to buy when the price is broken the structure. So here you would think that this was a break of structure. So this was a break of structure as the price moved upwards, which was basically a raid on liquidity. So once this raid on liquidity has taken place, you wait. What are you waiting for? You're waiting for price to give you a change of character on a lower time frame. Here you must wait. Why? You can't buy when the price is bullish, or you can't buy when in an uptrend. You can't sell in an uptrend. You want to sell when the price is now has shifted from being in a bullish trend into a downtrend. So you wait for a change of character. Once this has taken place, once there is now a change of character, when the price went below this previous high that resulted in a break of structure here. So we're now looking at the macro picture here. Probably this is on a lower time frame here. This particular level, we also had the break of structure as the price was moving upwards. So you're waiting for price to take out this high that resulted in the price moving upwards. So when this takes place, the price is broken the structure and it is moved upwards. You wait for price to come down. So here we have our raid on liquidity. We have our raid on liquidity, or a sweep on liquidity, or a liquidity sweep. So here we have our raid on liquidity. Raid on liquidity. which took place when price moved upwards here. So let me just mark that particular area so that you can see this was the raid on liquidity. Here, when the price went above this particular level, it was a raid on liquidity. So what you're waiting for is for price to have a change of character, which now tells you that there's now a shift in market structure. So you then wait. One, you've seen that the price, this was a raid. Why? When price hit this level, it immediately came down and it resulted in a change of character. Probably this is now on a lower time frame. When this took place, you're now waiting for a return. One, when there's now a change of character after a raid on liquidity, a change of character after a raid on liquidity, you're waiting for price to return one to an order block or an institutional reference point, which can be an order block at this particular level, or it can be a fair value gap. So let's look at a lower time frame. Once this took place, then we had the following. Okay, we want to go to 5 minutes. So you need to switch the time frames and go to a lower time frame so that you can look for an entry. So basically that's what we are now doing. And we can see here that at this particular level here, we had a change of character here. The change of character came in this particular. Okay, if you go to the 1 minute time frame, if you go to the 1 minute time frame, I'm not gonna go to the 1 minute time frame. What we can see is this. Here there was a change of character. Okay, let's just be more practical. Okay, here there was a change of character, and here we had an order block. Here, the last bullish candle here before the price was able to change, result in a change of character here. So this is the order block on a 5 minute time frame, but we want to move down to a 1 minute time frame and check what was taking place there, and so that we can get our time frame. So basically, once you've noticed this, you need to move to lower time frames. On your lower time frames, you're looking for an entry. You're basically looking for an entry. So obviously, okay, it was going to be something like this. If we move to a 1 minute time frame, we could see price was moving like this. Price went up, came down, and went up like this. So this was a continuation of a bullish trend. So what you're waiting for is this. This high-low resulted in the break of structure. We had a break of structure here. So we mark it. We have a BOS here. You're now on your lower time frame. So you're waiting for price to take out this high-low. And this took place here. If we can see at this particular level, price was able to close below this particular level. Here, we now have a change of character. So this is the change of character that is now taking place on a lower time frame. What does it signify? It signifies that now the price is now in a downtrend. So what are you now waiting for? You are now waiting for, so like what I said, this is fractional. You can do it on any time frame, not only the one time frame, but I'm just giving this as an example. So you can see the last order block that we had was this particular order block here. So once there is now a confirmation that the price, this was a sweep on liquidity, the price came down and it resulted in a change of character. Once the raid occurred, you then wait for the price to return to an order block, and this took place at this particular level. We had the last bullish candle that took place at this particular level. This was the last bullish candle, the last up candle, which was this green candle, and then it resulted in a change of character. So the price then started to move downwards and resulted in a change of character. So what you're waiting for is that once there is a change of character, you're waiting for for price to return to an institutional reference point. So that's take place at this particular level here. So you can see once there was a change of character, you want to wait for price to return to an institutional reference point, which can be an order block or which can be a fair value gap. So in this case, it was an order block. We have an order block that I've marked here, and you can see when price came to this order block, then price started to move downwards. So this is how you trade these raids on liquidity. This is how you enter your trades. So obviously your stop loss is just going to be above this sweep on liquidity. So when you use this technique to enter your trades, you'll see that your chances of losing. This now confirms that this was just a raid. Why? It resulted in a change of character. You wait for a return to an institutional reference point, which can be an order block or a fair value gap. And we can see after that, the price then started to move downwards. So you go to a lower time frame to get these entries. So this is how you trade these raids on liquidity. This is how you anticipate if there is a raid on liquidity. How then do you trade them? So basically, that's how you'll be trading. Okay, so let's look at another example. Okay, assuming that okay. So this is what I was trying to explain, that once there is a change of character, you go and look for an order block or a fair value gap, and then you then enter your trade. So this is how we trade these raids on liquidity. Okay, so the price is in a bearish trend on the higher time frame, like what I said. This movement is a raid on liquidity. This movement that took place at this particular level is a raid on liquidity. This is just a raid on liquidity, or it's a sweep, a liquidity sweep. This is just a liquidity sweep here. And we can see when the price was manipulated upwards, the reason was that there was buy-side liquidity. Buy stops or stop loss that was residing above this level here. So these are liquidity pools. This is buy side liquidity that was residing here, and you can see once this sweep on liquidity took place, what then happened? Price then started to move downwards. So you'll be looking forward, if you sell at this particular level, you're looking forward, your target is to look for sell side liquidity. So you're basically selling here when price is in the premium, and then you sell, your target will be just below this old low. Why? Because there's also liquidity that is residing here. There are also some sell stops and also some buy stops or sell side liquidity. So you're buying above an old high, and you are targeting liquidity that is residing at this previous low high. So there is also what we call buy side liquidity, sell side liquidity residing here. So you're buying, you're selling here, targeting the liquidity that is residing below this old low. So you would see this happening over and over. You can see here again, price was manipulated to go above this level. Why? So that it can grab liquidity that was residing above this buy side liquidity. And once that took place, they then offloaded the price below this sell side liquidity. So you would always see this taking place. Why is the price is moving above this level? It is to grab liquidity that is residing above these buy stops. So basically, this is what I had for you. So let me just quickly make a summary of what we're talking about. So today we're talking about liquidity and liquidity pools. When can we anticipate raids on liquidity? And liquidity is then open interest for buyers and sellers. And what you would normally see is this. When price is, when the current price, at the current price, we have buying interest that is residing there in the form of buy stops, and retail traders want to buy when the price is above the market price, and with smart money traders, they want to sell when the price is above this market price. With retail traders, they want to sell when the price is below this market price. So below the market price, retail traders are looking forward to sell in the form of these pending order sell stops. And the smart money traders will take advantage of that. They will then buy when the price is now in a discount. So basically, this is what we're learning about in this, and how we can take advantage when there is a liquidity sweep or a raid on liquidity. Thank you guys for your time. Enjoy your day.